Good morning, everyone. Welcome to our Tuesday morning trading room. Just a moment here. We'll get the screen share going on. All right. So yesterday, after we left the trading room, the market did continue in a slight upward momentum, emphasis on slight. We really didn't trade much higher than we did during the morning session, but overall it was still bullish, a little bit bullish through the Asian session and the European session, but very, very quiet. This is starting to lead some people to believe that the market might be topping out again. Oh, those of us who've been looking for a correction for a while, I suppose we will continue to do so until we finally get one. All right, well, it looks like we're off to a little bit of a slow start. I had an email from Phyllis yesterday. Phyllis was asking about reviewing the Raptor signals. Now, we'll do that here in just a second, but before I do, let me show you where you can find these things. If you go to YouTube and you do a search for Indicator Warehouse, you will come to the Indicator Warehouse main page. There's a whole lot of videos here, but if you go to that main one, you'll get to see Adam's smirking face. And you can roll down here to the Raptor trading system. These videos here are going to review a lot of the stuff that I'm going to show you right now. But if you don't feel like sitting through those, then just feel free to ask. I am more than happy to review this stuff for you. Okay, so it looks like the market's still off to a little bit of a slow start. Let's take a look at the different Raptor signals. For those of you who have been through this with me before, you can go grab a cup of coffee or just check your emails. The Raptor trading system is a hybrid system. And by that, I mean it incorporates elements of the Hawk, the Falcon, and the Eagle. And it does so all in one trading system. The signal prompts are to alert you to what are considered the highest probability signals. Each of the signals tend to have two phases to them, and you should always interpret the signal within the context of the marketplace. So for instance, as I pointed out the other day on the Eagle, well, we can take a look right here as well. If you're looking at your Raptor chart and the market is all over the place like this, there's no definable trend, then you need to recognize that the market is probably within a trading range or at least within a chop. And this is going to make things more difficult to trade. So when you generate a signal, that doesn't mean that you won't necessarily take the signal, but that it may require you to handle the signal a little differently. So for instance, here's the a number one signal. Now the chop hasn't fully developed yet. You can see we've come out of an uptrending market, right? We've come out of an uptrending market. There's been a little bit of a reversal, and now we come back and the market comes back into sync. Actually, I think this was yesterday's first signal. Or sorry, oh yes, it was. So there's every reason to believe here that the market may be continuing the trend. But if things are looking a little bit dicey to you, rather than, maybe go in with size, maybe click here on your trade manager and lock it in manual mode and do the trade and only take a single contract. That way, if you're wrong about it, okay, you were wrong, but at least you didn't lose a lot of money. All right. So context, always important. Almost every day I get an email that says, hey, Eric, how come this signal here didn't work? And almost every day I will write back and I will explain the context of the trade, how the market was very sideways. You were very close to your profit objective, which I will explain here in a moment. And there were several reasons to make you think that maybe that may not have been the best signal to get involved in. All right, so now let's take a look at the signal prompts. The first signal, the cloud crossover signal, let me see if I can find you one that looks a little bit more textbook. Here we go, this will work. The cloud crossover signal occurs when the clouds are crossed one way and then they cross the other way. It essentially is like a trend change signal. It shows you a market that, in this case, it's choppy, but a slight bear. So we got a slightly bearish market, and it develops into a more bullish market. When those clouds fully cross, that's element number one of the cloud crossover signal. The clouds have to fully cross and be in sync. Element number two is there has to be a little bit of a pullback. Now, ideally, this pullback will tend to be a little bit deeper, but once you get that pullback and the market comes out in the new direction and you print a signal, that will be your number one signal. Allow me to scroll back here just a little bit further, see if I can find you one that looks a little bit more ideal. Well, you can see we had a lot of choppiness going on. I think this will be a good one here. Oh yeah. Okay, there we go. That's the one I'm looking for. So you see how we have a little bit more of a pronounced pullback here? That's usually what we're looking for. In this case, the clouds were just mixed up a little bit and then they regained their synchronicity. We got the pullback, the market comes out and produces a buy signal. That's your number one signal. You can see here was a very late number one signal. Why was that one so late? Well, because it took a while for the clouds to cross. Note how small the pullback was. So you need to understand the elements of a number one signal so that you can interpret the signal perhaps a little bit earlier. I would have probably been watching right here for a possible buy signal, even though as far as the Raptor programming goes, this was not a number one signal. It still has the elements of a number one signal. See how the clouds are crossed? They're not fully crossed, but they're pretty darn close, aren't they? They're starting to cross over. There's a little bit of a pullback. This is what I would refer to as an early number one signal. Here was a number one signal that didn't go very far, but it was still a number one signal. The clouds cross, there's a pullback into the cloud supports the new direction, we get a sell signal, there's your number one signal. Probably got low enough to hit your high probability target and not much more. I'm going to actually address the number three signal after the number one signal. The number three signal is a continuation signal. It's the hard edge bounce. For a signal to be a continuation signal, well, you have to have at least something resembling a trend to continue. So if it looks to you like the market is making a little bit of a trend, if we're starting to make some higher highs, a good way to see this, if you can't see it easily, is just to connect the dots. If it looks like the market's going up or down, as the case may be. By the way, here's probably a pretty decent little sell. Well, let's wait for the reaction. Once the market encounters the hard edge, as I mentioned, we always anticipate some sort of reaction to the hard edge. So that's where the number three signal comes in. The market is in a trend, it retreats to the hard edge, either the first one or the second one, it doesn't matter. And then it comes back and it looks like it's going to try to resume the trend, and voila, we print the number three signal. Again, the number three signal context is fairly important. So if it looks like we have a reasonably strong trending market or a trending market at all, number three signal is a viable trade. The number three signal essentially comes from the old trading axiom, buy low, sell high. Right? You don't want to buy up here necessarily, because buying down here is a little bit easier. That's where the number three signal comes in. But again, it's a continuation signal. So in this instance here, where there's not much of a trend to continue, once more, you need to take your signals with a little extra caution. Because when the market is sideways, the signal parameters may be met, but it may not be the best looking signal. So that's your number three signal. And you can see when the market gets going, you can get some really decent follow through off of a number three signal. It's important, once again, to be able to identify the number three signal apart from the signal prompt. And this is something that you'll learn by using, because occasionally the market will come down and it may just come up a few ticks short of the hard edge, either of the first trading band or the second trading band. It will then reverse and head higher and produce a buy signal, but if it doesn't encounter the hard edge, it will not print a number three. Let's see if I can find you an example of that. See, here's a pretty decent number three signal. The trend, a new trend is underway. The market comes down, encounters both hard edges, and then rallies, and the programming says, okay, all the signal parameters have been met, and away we go. You should note that there are probably close to 5 or 6 different algorithms running in the background here, whose conditions have to be met before we even print a warning dot, never mind a buy or sell signal. Here again, you can see just the sideways nature of the market. We're producing number three signals, but no follow through, right? Because again, there's no trend to continue. All right, I can't seem to find you one that just came up a few ticks. Well, let's ignore this one here for a moment. This would have been a good example. This number 3 signal is actually printing off of this encounter with the hard edge. But let's ignore this one for a moment and pretend the market just came down to here and then reversed and headed higher and produced a number 3 signal. In this case, because it did not encounter the hard edge, it would not have printed a signal prompt. But that would have been close enough for me to probably give it a go. This one, on the other hand, is not close enough. Even though it did work out, we're only about halfway into the trading band. If I'm going to look for a retracement, I'm going to look for something a little bit deeper. So occasionally you'll see me take a signal like this and I'll call it a number 3 signal, even though it may not have encountered the band. Now, once again, for those of you tuning in late, this is a number 3 signal because it did encounter the band right here. But even if it did not, I would probably consider that to be close enough to be a hard edge bounce. All right, so there's your number 3 signal. The number 2 signal is the counter trend signal for the Raptor. And it also has 2 elements to it. The first element is that you have to have a trend to counter. So again, context is important. If you have no discernible trend, then there's really no trend to go counter to, is there? So that's element number 1. Element number 2 is that there must be a test of the extreme. In this case, the extreme is the high, and then there's the reversal. You will find that most often, your most reliable number 2 signals will come after a number 3 signal. After an encounter to the hard edge that no longer can continue the trend, if you print a number 2 signal after a number 3 signal, there's probably a pretty good chance the market's going to reverse at least to the hard edge. That is your target for a number 2 signal. And as you can see, very often the market will continue a little bit further still. If we go back here where we had all that choppiness and I was showing you this number 2 signal here, again, there's no real discernible trend to reverse from. I suppose you may have considered this the trend. Here was the test of the extreme. Don't worry, the programming will pick that up for you. And then here comes the signal. But this one did not occur after a number 3, although you may have considered this the hard edge bounce. But really the one that nixes this one is there's the hard edge. That's my profit objective. So this signal, even though it is a valid signal and it did get to the hard edge, the signal printed late. So it's not the most desirable number 2 signal. This one, on the other hand, looking a little bit better. We definitely have a discernible trend. We definitely have had a test of the extreme. We've even had a number 3 signal, which is failed. And now we produce a number 2 signal, and there's plenty of room to get to the hard edge. So this would be a more desirable number 2 signal than this signal right here. A good exercise and an easy way to get familiar with the signals themselves is just to grab your chart and scroll back and take a few minutes and take a look at each signal and see how it played out and see if you can see what made that signal work. One thing with the number 2 signals, and you won't get a number 3 signal before this, but is when the band gets very, very broad. See how wide the band is here? I would have actually considered this a number 2 signal, even though it did not print. We have a trend. We have a test to the extreme. We have a very broad band. And we have a sell signal. This is a number 2 signal. So you're asking, well, Eric, why did the number 2 signal not print? Well, it probably didn't print because this was maybe a little bit stale developing. If you go to your indicator window and you highlight your Raptor, you can actually adjust your Raptor sensitivity. About halfway down, you'll encounter signal parameters SE. That's the number 2 signal. That's the soft edge sell. That's what we call the number 2 signal. And by default, yours will be set at 1.01. I like to dial it up a little bit. I find 1.25 works not too bad. The higher this value, the more number 2 signals you will print. The minimum bar retest has an inverse relationship. The lower this value, the more number 2 signals you will print. So if you want your number 2 signal to be really, really choosy, then dial that number down. If you want it to be a little bit more inclusive, then you can make that value a little bit higher. So my point was showing you that is if I dialed up the SE sensitivity maybe to 1.5 or 2.0, it would have definitely highlighted this as a number 2 signal. But then it will probably also highlight every sell signal as a number 2 signal because I've really dramatically reduced the sensitivity of it. Okay, Phyllis is asking, what is the hard edge? Well, the hard edge is this edge here of the trading band. It's a part of the programming that has identified an area where the market is likely to respond. And we have 2 hard edges. We have a faster hard edge and a slower hard edge. These are eagle clouds, by the way, from your Eagle Trend Trader. That's why very often if the Raptor is testing the hard edge, you will see that there's a hard edge test on the Eagle as well. The difference with the Raptor is that we've doubled it up. All right, so there's your quick overview of the 3 signals. Here you can see we're producing a number 2 signal. Note, this was close enough to be a number 3, but it did not print a number 3 because we did not intersect the lines exactly. But there was probably, looking at this signal, there was probably enough here that you figure, well, okay, if it's going to retest the lows and come up short, I have a little bit more room here. I have some room to work. Here is also a number 3 signal. Note, it just came up a tick short of the hard edge. But once you know what you're looking for, you're able to take these types of signals as well. With this particular signal, you can figure that even if the market does come up short, it will probably come down at least a tick or 2, and that will give me a little bit of room to adjust my stop. If, for instance, it looks like the market was going to reverse on this next bar, well, then I can hit my break even button or manually roll my stop down a little bit and try to take some of the risk out of the trade. Because I know if it fails at this point, it's very likely to reverse and produce a number 2 signal. Note the reversal came right at the profit target, which tends to happen. The market will hit our high probability profit objectives, and a lot of times you'll see a reaction there. And then from here, now we're producing a number 2 signal. And it has printed after a number 3, and I'm saying number 3 in air quotes. So this would be a more reliable number 2 signal to try to take advantage of. Target, again, the hard edge. And we would just be looking for a little bit of a run up. And there we go, we hit our profit target and our hard edge. So the signal prompts are there to help you identify the higher probability signals, but it's a good thing to bear in mind as well what's going on. I hope that helps a little. And we had a monster move lower. I should have maybe saved it. Oh well. If the market is truly committing to a trend or a move lower today, we should have another chance to get in. All right, here we are producing a number 3 signal now on the Raptor. It is a credible signal, a number 3, and we even have an opportunity at a second push entry. Stop placement ideally should go up here. Oh, darn, I'm talking too much. I should place the trade first. The challenge on this signal is whether or not the sellers still have a grip on the market or if the buyers are going to try to reverse it. There should be one more bar lower here, and once we see that, then we can start to get a little bit more aggressive with our stops. Oh, actually, I'll leave that up. Because this is where the buyers are going to look to buy in again, somewhere around this trend line, 66, 70, 71, 72. Come on, get below there. All right, so they're hesitating a little bit. You could bring your stops in early now. If not above these highs, certainly above here. Or if you want to be a little bit more conservative, above here as well. And what this does is it effectively reduces your initial risk exposure. While your initial risk may have seemed relatively high, you can see by bringing your stops in as the market reacts, you start to reduce your risk exposure considerably. So right now we've got maybe $100 at risk. And at this point, I would probably bring my trade to break even, because you can see we're encountering the trend line. This is going to be do or die for the bears. And I'm a little bit of a chicken. And there we go. I would have got a break-even tap out. But I gave the trade a decent chance to sort itself out. The trend is down, so there's every reason to believe that it could head lower still. Maybe I was a little bit too quick with that. All right. Okay, we're in a little bit of a sideways skid at the moment. Yellow bars cropping up here on the hawk. That's always a sure sign that you're in a sideways market. The falcon, trend line, and filter breaking up. The eagle, well, it just plain looks sideways. And the raptor as well, also looking sideways. We are making higher swing lows, and it does look as though we're sticking to this trend line. So we're going to get another buy signal through here. And there it is, another number 2 signal. And you could try that for a little bit of a run up. Now, you're probably wondering, well, Eric, the hard edge is right there. Why would you try to buy that? Again, it's the context. The market keeps trying to head higher. We've had an attempt to head lower that has been cut short. And now we come back with yet another buy signal. So I'm thinking the market is going to blow past this hard edge and eventually develop a number 1 signal. That's my thinking behind it. This is a very thick area of trading. There's a lot going on here. But it does seem as though the downtrend has lost some of its initial momentum, at least temporarily. More warning dots, so this is also going to develop into a buy signal. They slipped me a tick, the stinkers. Okay, up to the break even, and come on. Oh, don't you dare. shoot. I wanted to get my $5 back. I rolled my profit order, $5 extra, and they're kissing it, but they won't trade through it. Oh, you scoundrels. If they don't look too far back, I should be all right, but if they come back into that trading band, they're going to tap me at break even. Oh, you stinkers. Oh well. What are you going to do? They're still sorting stuff out. Context is one of the most difficult things, I think, to interpret. Because there's a tendency for us to want to be in the market. You've probably heard it before, but it is true that flat is a position. Not being in the market, making a conscious decision that this is not the right time to trade, is a viable trading position. Maybe that was it. Maybe that's all the buyers got. Here the eagle is producing yet another green bar sell as we encounter the hard edge. And this does look a little bit like a bear flag. This tight little slow, slightly upward consolidation. I suspect we may get a sell signal out of this. Maybe. All right, class. If the Raptor produces a sell signal here, it's not going to do a signal prompt with it, but what signal would it be? Would it be a number 1, a number 2, or a number 3? You got a 30% chance of getting it right. It's just like those good old multiple choice tests in school. I used to love those. So if it continues lower and it produces a signal, what signal will that be? All right, well, Phyllis is playing. Thank you, Phyllis. Phyllis is saying a number 2. Nobody else? Really? I know there's more than Phyllis and I in the room. Oh, there we go. Okay, Scott's chiming in. Scott's going with the number 3. Frank, number 2. Yeah, Phyllis says they're shy. Yeah, Scott says it looks like a string of Christmas tree lights. You're right. It would be, I would have accepted a number 1 or a number 3. It's not number 2, Phyllis, because the number 2 is counter trend. Now, you're probably looking at your trend a little bit too closely. You're probably looking at this as an uptrend and then this as a new downtrend. That's maybe looking at things a little bit too tight. Generally speaking, if you're having a hard time deciding trend, here is Eric's rules for trend determination. If your price starts in the top left corner and goes to the bottom right corner, you have a downtrend. If price goes from the bottom left corner to the top right corner, you have an uptrend. If price does that more than once on a screen, you probably have no trend or a weak trend. See, here we have 3 swings. We got a big swing up, swing down, another big swing up. This would have been at a very, very weak uptrend or a sideways trend. So when you're looking at something like that, you need to start thinking, am I in a trading range? Versus seeing something like this where you can probably say, yeah, we're in a downtrend. So as such, if I believe I'm in a downtrend, I'm going to do better selling. If I believe I am in a downtrend, you can almost sell any signal. You're probably wondering why the Raptor produces all these other signals. Well, they're what we sometimes refer to as advanced signals. But if you're in a downtrend, you can almost sell any other signal and do okay. So long as it's a sell signal, you probably do all right. And vice versa in an uptrend. If you believe the market is in an uptrend, you can probably buy any signal and do okay, providing you don't stick your stop right below the signal bar. Right? You always need to use a reasonable stop. We're still kind of stuck. There was some bearish blowback here as we took out this high. Let's see what happens as we get closer to the median line. All right, well, we'll put that on the shelf for now. When the market is not trending well, when you suspect that maybe you're entering a sideways trading range, it's a good idea to use what we refer to as a second push entry. All that means is that we allow the signal to print, let it engage, and then see where it reacts. I don't know why it is, but almost every time when the market prints a signal, there will be a reaction to engaging that signal. It's most prevalent on the Eagle. However, it happens on all the other tools as well. The market will react after engaging a signal. I guess it just goes to show the programming has identified an area of sensitivity. So if you wait for that reaction, if you think, am I in a sideways trading range? Is this market going to stick to this little bit of a bullish trend line that's building? I'm not sure. I know. I'll do a second push entry. So what that does is, okay, it gets you in a few ticks late, and you may have to adjust your profit objective accordingly, but it will most times help keep you on the right side of the market. And if the market blows too far past your signal, well, then you just have to resign yourself to the fact that you may have missed the signal. But a missed signal is always preferable to a loss, at least in my books. Okay, we got a little bit of a rally up. The late filter entry signal here on the Falcon coincided with the early cloud crossover signal. That's the early #1 signal on the Raptor. So the clouds almost fully crossed. There's a little bit of a pullback, and then the market comes out and produces the signal. Once again, it did not give you the signal prompt because the clouds are not fully crossed yet. I'm trying to get a handle on which way the market's leaning today. Had that early bear move out of the gate, and now they're kind of hemming and hawing. Nobody's ready to commit to anything yet. In hindsight, this would have been an easier signal to take here on the Hawk than real time. Here's your first micro-macro cross signal. It is coming out of a bit of a sideways mess. I would not have been, even though, as I very often say, the first micro-macro cross is a signal I will almost take without exception. This might have been the exception. Once again, it's just the context of the thing. We're in a sideways trading range. If I highlight the range like this, I know if the market is in a sideways range, buyers are buying down here, sellers are selling up here, and I'm producing a buy signal. Maybe not. After that, we drifted into a 4-arrow consolidation. This one might have been a little bit more inviting because at this point, it looks like the market's trying to hold something resembling an uptrend. And after all, with the hawk, we're just looking at a quick little scalp, right? So it's a fairly easy target to hit. But it is one of those signals that was easier to see in hindsight, like I said, rather than trying to do that one real time. It's okay to wait though. There's nothing wrong with waiting. A couple of things could happen here now that we are kind of back toward these more recent highs. That little swing high right there. There's a very good chance the market's going to drift back here and produce a proper #1 signal. If we get a little hesitation in here first, it's going to produce a #2 signal. Now, if we are in a sideways trading range, it's a good idea to sell near the top and buy near the bottom, which would make a #2 signal, even though it's technically counter trend, it would actually be a with trend signal because the bigger trend is down. It starts to get a little confusing, doesn't it? Oh, that's an interesting idea, Keith. That must have been Ray Burke who suggested that. Keith says a good method I saw yesterday on a video is to make a 30-tick eagle chart. That'll really show you a good direction on the market. So if we throw a 30-tick eagle on there, it kind of gives you a bigger perspective, a bird's eye view, if you excuse the pun. That's one reason I keep a daily chart handy as well. It's usually fairly easy to see a trend on a daily chart. So according to the big eagle, the trend definitely up. Short-term trend is down. probably why today is a little bit more difficult as well, because we've got those two forces really trying to square off against each other. It's times like this that we want to pick our battles a little bit more carefully. Well, not much going on here at the moment. Yes, Keith is asking, is that a 4-arrow consolidation building in the Hawk? It most certainly is. Again, I'm wondering whether we're at the top end of the trading range. So here's the 4-arrow consolidation. It is a scalp trade, right? So you're not looking for a lot out of the market. Initial stops should go 2 swings back. So it puts your stop somewhere around there. When you suspect the market is in the sideways trading range, the best course of action is to let the market get outside of that range. So let's say we're looking at this and we think, is this a sideways trading range? Is this going to end up going sideways? The only way to know for sure is to let the market break out, allow it to retest, and then look for that buy or sell signal, as the case may be, to let you know that the breakout is going to stick. So that 4-arrow consolidation now also becoming a macro pullback. I think it's struggling a little though because of the potentially sideways nature of the market. We are an hour into the session, and for the last little while, it seems like the market has been going gangbusters out of the gate, and then it just kind of hits the skids afterwards. What I would be looking for if you're in this trade is I'd be looking for one more bullish bar to form, and then I would bring my stops in. That would tell me that, you know, the buyers are giving it one more go, and if they fail, well, then it's probably going to reverse and head lower. But right now we are at a snail's pace. All right, well, we'll clear that for now. Crude oil is dead sideways. The euro dollar, yeah, hasn't done much through the North American session. Just a really quiet day overall, except for that early move, of course. Oh, here comes another rally attempt. Maybe. Yeah, Steve says, yuck, another day with no trades. Yes, the best opportunity came early. Now we're just drifting. All right, so here now that sell signal that I was mentioning to you, let's show that. Oh shoot, they jumped right past me there. This was that number 2 signal that I was talking to you about. It did not print as a number 2 signal because the parameters were not exact, but it is the larger width trend signal. Had I hit my button a little bit earlier, you can see we would have hit the profit objective already, but there we go. Hooray for us. You kind of knew the sellers were going to come back just because the buyers could not muster anything to the upside. And it did develop a little bit quickly. You had to be watching for it. But there was a sell signal. Hooray for us. And that might be all that we're going to see for the rest of the morning. Ooh, big follow through on that. Look at them go. Right back down to the low of the morning. Or pretty darn close. Now I can almost guarantee we are in a sideways range. See how we're reacting to the lows? How the buyers are coming back in? Well, that's characteristic of a sideways trading range. All the buyers bought got wiped out on this move, or the weak buyers got wiped out on this move lower, and now the market might try to buy up to the top again. Regardless, it does look like a sideways range. which is going to make things a little bit tricky. As I mentioned, the best course of action now, if you suspect a sideways trading range, which I fully do, is you got to let the market get outside of this range, or you do the buy low, sell high. And it's probably advisable not to hang on too long. So you could just take like a scalp profit, get in, get out. You don't want to be messing with the sideways trading range too much. Possible 4-arrow consolidation green bar sell. If we come back with a sell signal here, we're printing the warning dots. That would also be with the bigger trend. Oh, wow. Still got warning dots on the green bar sell. That's crazy. It's probably not the kind of trade that I'd want to put real money on. If you're in sim, go ahead, try it, see how it plays out. It'll probably get down to at least its scalp target, but it's not a real good looking trade. If anything, I think we're going to see the market head back toward the top end of the trading range. Might be a little hesitation here, just a little test to the extreme, and then the market will come back and probably rally up to the top end or near to it. That's what I would suspect. And there we go. There's a little bit of a rally. A first micro macro cross higher. It's just a sideways mess, folks. I've been telling you about context. I'm not going to manufacture a trade. It's not the best looking setup, that's for sure. Buyers are trying. See here on the Geiger counter, look at that buying spike. Here's another one. Market participation is light, though. It is. There's not a whole lot going on here right now. And we are right in the middle of the trading range, which is very, very neutral. Just by definition, there's nothing going on there. And we're starting to get conflicting signals. Here, the hawk was a little bit bullish. Well, now it's turned into yellow bars. The eagle producing a green bar sell. Hey, there's a cloud crossover signal on the raptor, so the raptor bearish again. For a moment, anyway. All right, gang. Unless anybody has any questions, I think we might button up shop here a few minutes early. The market's definitely reluctant to go anywhere right now. If you are going to continue to trade, well, I think today's trend is down, so you're probably going to do better shorting. But I still believe the best course of action, just wait until we get outside of this trading range. Make sure we can stay out and then get involved. That's always going to be the safer play. All right, on that note, I will see you tomorrow Have yourselves a wonderful day. Talk to you soon. Bye for now.